The situation is that Anthropic, the proximate cause of this sell-off was Anthropic releasing this tool that was going to basically compete with kind of legal services. But this decline's been going for a while. There's been about a year's worth. They sort of peaked in summer 2025, and software stocks have gradually been selling off since then. And I think the idea is basically like when the internet came along and kind of upturned, news publishing, music, high street retail. The idea is now it's the turn of legal services, possibly even medical services, financial services. And I think that's what we're seeing. And I guess the interesting question is why this week has it suddenly happened as quickly as it has. And I think that is actually, there's probably more in the macro area that's helped with that.
Yeah, and Paul, you had a great story. I mean, I'm not going to lie. So I was covering UBS in Zurich, and so we were reading the story, and I was about to interview Armadi, and I was thinking like, wow, KKR got slammed last night. Same for a lot of the private equities. I mean, this was kind of unexpected by a lot of people, and you had this brilliant column, also explaining that because we don't really know what's underneath this private equity owners, that there was maybe a lot more anxiousness out there.
Yeah, and I think one of the issues is a lot of deals in the software space were done at peak valuations in and around and after the COVID pandemic. And then we had that sharp rise in interest rates afterwards. And then a lot of the financing for those deals ended up being done by private credit because we went through that spell. If you remember, Twitter debt was the most famous part, but there was a whole lot of leveraged finance that banks got stuck with as rates suddenly shot up. They weren't being active in funding buyouts anymore. So you have this particular vintage of overvalued deals with very private credit concentrated financing behind it as well. And that's a bit of a worry for the future because it's just going to be probably a very bad vintage.
When do we know, John, when we've fallen far enough? And I guess, again, these were meant to be quality stocks, right? So you're also upending kind of market thoughts in general.
Well, I suppose the problem is these companies, now investors are worried that these companies don't have a moat anymore. And that's the thing that makes it a quality stock. And if your moat evaporates because, AI has come along and competed it away, then that means that, it's very hard to say, well, how far should it fall? At the same time, it strikes me that this has been very indiscriminate. Because, it's very hard to tell the winners from the losers in any kind of boom like this. And I guess markets are in a kind of shoot first, ask questions later mode. Because, you look at what's happened to the financial stocks today because of the Anthropic news about them moving into financial services. It's like, okay, but this is slightly a panic reaction, but at the same time, catching falling knives is a good way to lose your fingers.
That's a very, very graphic way of putting it.
Yes, sorry, guys.
But Paul, when you look at the risk of something being systemic, there's so much money being spent. I think we calculated like $600 billion. I think in this week alone. Is there something if valuations collapse for some reason? How much does it impact private equity and banks?
We've yet to see how far this is going to go. I guess there's some real odds tensions here. On the one hand, people seem to be betting that AI eats all software, and on the other hand, they're also betting that AI spending is going too far, and it's a bubble, and it's going to burst, and it's going to be wasted, and so on. So these are kind of conflicting, and I think what John was getting at earlier is there is been a lot of factors kind of turning over as well, like momentum trades in stocks have just kind of collapsed very recently, and especially this week, and growth has collapsed. And there's a lot of people are just sort of rebalancing, all of their expectations about markets. And I think, and one of the things with software particularly is people would have to think about how key is it to an organization? Is it something where a company is going to be very happy to let all of its staff just make up their own code all of the time? Is what they're doing auditable? There's a lot of kind of serious stuff that people have to consider here. But, this is we could be in for a very messy day today. There's a lot of kind of selling that could continue to come through. And in terms of, banks, it's where it comes into, leveraged investors and, margin calls and all of that sort of stuff. And especially in the US with a lot of very leveraged retail investors, that's where we might see some real, issues.
I know, I agree. I think the deeper issue is there's a bit of a momentum unwind, because if you look across the market, you've got Bitcoin collapsing, you've got gold sliding, you've got silver collapsing, and I think an awful lot of that is to do with the kind of surprise that Wash is going to be the guy that's running the Fed. And although Wash is presumably keen on lower interest rates, there's not the same sense that he's going to be, if you like, a puppet or an ultra-easy money Fed. And I think that's still feeding through the market, because if you look at the dollar, it's bounced quite strongly.
Right.
And yeah, the kind of dollar debasement trade kind of peaked about a week ago, and I think that's also helping with this momentum unwind.
I had the chief economist from BNP Paribas who was saying actually the dollar has behaved like it used to this week.
Yeah, exactly.
Right? So what does that tell us also about correlations?
Well, I guess it's kind of risk-off. It's a risk-off trade, the dollar. The dollar gets stronger, other assets tend to get weaker. I mean, obviously, that's a gross oversimplification, but that's basically how it works. And I think that what it comes down to is people get overexcited about the end of US exceptionalism, the dollar debasement trade in particular. That started getting questioned whenever Trump nominated Kevin Wash. And I think a lot of that is what we're seeing now, the kind of heat going out of these momentum trades, and that includes gold, silver and AI.